increasingly sensitive rating agencies
Yes.
who are hammering companies with enterprise risk management, which is driving even more risk management thought process. And then layer on top of that sort of peak zone. The peak zones drive capital requirements with reinsurers and insurers. So you've got California, you've got Florida, particularly Florida. And I think Florida, as you know, is going through all kinds of issues looking at the Florida Hurricane Cat Fund. But again, depending on what happens there, that's billions of dollars potentially required.
If I'm running a reinsurer or an insurer now, I mean, I've got to be feeling a little bit besieged with all of this coming at me.
Yeah, I think there's a lot going on. I think for the smart guys, and there are a lot of smart guys out there, it's an opportunity. I mean, I look at this as a real opportunity. But you're absolutely right. There's a lot to think about right now.
It's much more than the traditional analysis that might have been done a generation ago about looking at your underwriting and then looking at the claims frequency. I mean, this is a whole new ballgame. Let me ask a question about the reinsurance intermediary sector. Over the past period of time, at least, we've certainly seen a coalescing of the marketplace into three big giants, one big giant in particular. How do you think that marketplace looks? If you're people tend to look only in the sense of the reinsurance broker community at the client, but if you're the reinsurer himself or herself, how does this look to you if all of a sudden you're dealing with three giants who are basically supplying the preponderance of your business?
How do I feel if I'm the reinsurer?
Yeah. Is this good for you or bad for you?
I'm not sure. I'm pretty biased on this, but I'll give you my view. I mean, I'm not happy about it, right? I mean, I've got a giant factory or three giant factories, processing a bunch of stuff to me, and I'm not sure they're really looking out for my best interests. I'm not sure they understand, why I, as a reinsurer, am different from the next guy. It's a big factory. So, we thought there was a nice opportunity in the market 2 years ago for a new high-quality intermediary, and I think that opportunity has doubled and tripled over the last 2 years, 18 months.
That would be Tiger Risk Partners.
Tiger Risk Partners.
Tiger Risk Partners. Let me ask a question before I ask a specific question about Tiger Risk. The reinsurance broking business, which is essentially in some ways the fulcrum point between the buyer and the seller of reinsurance, is it an area that has begun to pick up the technology that other areas have picked up, or do you still see a gap? I've heard you speak at some conferences, so this is a bit of a leading question. I apologize to our listeners and viewers.
Yes, a little bit, but again, I compare reinsurance to other financial markets, and I think we're still, 5, 7, 10 years behind in certain areas. I mean, and again, I could, bore you for a long time on this topic, but I look at the mortgage insurance business and the technology employed there. Look at derivatives. Look at a bunch of other places, and I think we've got a long way to go. So no, we haven't. And I think people that think they're breaking out of the box, maybe open the window a little bit, but they're not. I haven't seen any bold new moves here.
Tell me about Tiger Risk. How are you doing? Do you have any news that you can release to us today?
I don't have anything that's going to bring the house down. I think as we were talking about the big brokers, and again, I apologize to some of your listeners that are with some of those organizations. There's some great companies.
Yes.
But they're pushing out the stuff and they're feeding the clients whatever stuff they want to feed them, and not everybody wants it. I think there'll always be a place in the world for big brokers, but we hear a screaming need from a number of clients for fresh, new, experienced people in providing a different viewpoint.
Well, you do
independent viewpoint.
You do have a very good team that you've assembled.
We do, and that's one of the core principles. And you could pick any one of our people, and you say good things or bad things about them, but we think we have some very experienced people. I think Jim Stannard, my partner, brings a wonderful perspective on risk management, a very fresh perspective. But sort of core tenet within Tiger is we want to create a platform for the best people on the planet to operate. We want it to be private. We want to deal with a small number of significant clients. We do want to take advantage of the new technology. And, you were talking about technology. We, just brought in a gentleman that you probably don't know, but he built a lot of the models, the analytic models for Renaissance Re. His name is Giant Kidokar. He was involved in creating an AIR model. And what we said to Giant is, listen, the clients today are modeling their cat risk. The brokers are doing the same thing, and the reinsurers are doing the same thing. We don't want to just walk in here and say, okay, we've got 150 cat modelers, and we'll tell you what your PML is. We want to go to the next level, and we're in the process of doing that. And I think you'll see some pretty different, pretty exciting new stuff from us there. But it's going great. I mean, I'm excited. I think, a market like this where clients are challenged, it's opportunity for us.
I would say so, believe me.
And I think, the last comment I'd make, Frank, is I think you'll look for us to create new solutions for clients from a capital standpoint. I mean, I think that's where we can also add some real value.
Well, that would be value that would be very needed these days, as we've just discussed. Listen, Rod, thank you very much for your time. We wish you the best of luck at Tiger Risk.
Thank you, Frank, and same to you guys.
We'll be talking to you again.
Appreciate it. Take care.
Problem with live TV. We have a breaking story that's coming in. Apparently, Adolf Merkel, M-E-R-C-K-L-E, who's the 92nd richest man in the world, this is coming out of Germany. He was 74 years old. He threw himself in front of a train last night in Germany as his $9 billion business empire was crumbling. Mr. Merkel apparently owes banks about $7 billion. He owns stakes in the Heidelberg Cement AG and the drug wholesaler Phoenix Pharmaceuticals. I do not know whether or not this is at all related to Bernard Madoff. If it is, of course, this would be at least the third suicide in connection with him, but we'll keep tracking this. Maurice Greenberg has written another letter. Mr. Greenberg and his affiliates control 10%, over 10% of AIG. Mr. Greenberg was apparently upset at the distressed bargain basement price of $742 million that AIG sold Hartford Steam Boiler to Munich Re for. Mr. Greenberg cites the fact that the chief financial officer of Munich Re, George Schneider, actually has been quoted in the press as saying the sale price is, considering the profitability of the company, very low. Greenberg said in the letter that he sent to the board that was released today, "We believe that a full explanation of the sale process is required from the AIG board. Among other things, we would like to know what did the board do to ensure that Hartford Steam Boiler was sold for the highest available price? Were any potential bidders omitted from the process? Has the board ensured that if a higher bidder emerges, the company can accept that bid without a significant breakup cost?" He goes on to say that certainly selling major assets at fire sale prices is not a viable strategy for reviving the company or even repaying the government. He says that as a major shareholder, we believe that we and all shareholders are entitled to prompt answers to these pressing questions. We'll look forward to following this one. More news from Ironshore, based down in Bermuda. They've continued its raid on AIG. They've now hired Joe Boren and John O'Brien to head up Ironshore's newly formed environmental insurance unit. Boren is going to be the CEO of the new business. He was the CEO of AIG Environmental, while O'Brien, who will take the role of president at Ironshore, also held that position as well as COO at the AIG division. Both will report to Sean Kelly, who is the CEO of Ironshore's U.S. operations. Stock market's up about 20 points right now as we go to a word from our sponsors.